Hi, this is Pat Moorhead with More Insights and Strategy, and we are here for another Fintech Friday. It is episode 10, and I'm here with Fintech Principal Analyst Melody Brew. Melody, how are you doing?
Doing great. How are you doing?
Good, man. We took way too much time off, and I'm gonna take the hit on every one of those. I think we hit post Thanksgiving, and I think I turned into a pumpkin for the month of December, and then I just had excuse after excuse the month of July, like COVID, but we were back here and
Yep,
we got some
we're
great
back.
stuff to talk about.
Yep. I think things kind of went a little bit quiet, and then both of our houses got hit by COVID. So,
Exactly.
things
Little
happen.
lull there, little
Yep.
lull there, but
Yep.
we are back
We're
and we
good
have
now.
some awesome stuff to talk about. We're hitting Walmart, getting into crypto on aisle 5, VC boom, more on borrow now, save for later, not to be confused with buy now, pay later. We have an update on Robinhood that is always fun to talk about and pontificate. Acronym of the week, which still I can't figure out what it ever means when we talk about DAO out there. The All In podcast has talked about it a few times, and that's about the extent here. But that's because you're the expert here on fintech, and I'm just the interviewer. So let's jump into this. Gosh, Walmart is getting into the crypto game. Does this mean that crypto is mainstream, dare I say, or just an old stodgy retailer trying to be cool? And the next thing you know, they'll be selling NFTs.
Yeah, well, actually, they did file some trademarks, some patents and trademarks, and it did include NFTs. So they filed on December 30th they filed applications for financial services, including cryptocurrencies or tokens of value, as well as NFTs. It just doesn't go together, does it? Right? It's like there's Walmart and then there's cryptocurrency, and it just doesn't seem to go together. So I kind of took a look at this, and really what's happening here is this. They're kind of quietly preparing to enter the metaverse. And what this means is that they're preparing to sell virtual goods. So what they said in a statement is that they're testing out, they're looking to learn and iterate on these ideas. But what I think is happening is they're preparing to sell things like virtual televisions and virtual sofas and virtual art and things that you can have in your metaverse, if when that becomes
You got to be kidding me. You're
no.
totally serious.
I wish I was joking.
All right. So don't these work better not owned by one company, but based on some NFT standard, like I want to put my virtual sofa into a video game over here versus using it on my Twitter account as my handle. I mean, what's their strategy? Are they trying to dominate the earth here, Walmart style?
Walmart style, yeah. They want people to come to Walmart for their virtual goods. I mean, I think it's a real, again, they said in a statement that they're looking to learn from this. So we'll see.
We're going to have to see how it plays out. I was just joking on the NFTs, by the way, but you're like,
oh, no.
This is very much NFT, and I could definitely see a potential for Walmart to accept crypto payments for tangible goods. I'll put you on the spot here. Is any thoughts on where they are on that right now?
So they did file, one of the trademarks that they filed was for their own cryptocurrency or token of value.
Okay.
So that's a potential. I don't know if they're doing that because they want to use that to be able to purchase these goods, these virtual goods, or if they want to be able to accept. I mean, they could, if they wanted to, accept cryptocurrency now. My personal take on accepting cryptocurrency is that that's just a dumb way to spend your cryptocurrency because it is so volatile. So if you spend, if you were to buy a house, several years ago using your cryptocurrency, it's now gone up 4,000% in value.
Right.
So if you paid $1 million for your house, then you actually paid 4,000 times that price for your house. So
that reminds me, by the way, when I first moved to Austin, there were people, they were called delionaires.
yeah.
And people who had random jobs that weren't executive jobs who were making millions based on some of the early stock options. And I remember talking to one of them who said, see this couch that you're about to sit on? That couch was a $400,000 couch because I turned in my Dell stock to buy that. Aren't I smart? So same type of concept. But I'm just getting way off the trail here. Let me dial this back in here and hit our second topic here. This is essentially this VC boom for fintech in 2021. I mean, the amount of investment overall VC investments is way up. Money in 2021 was essentially free. And with free money comes, a lot investment. Some would say overinvestment, i.e. the correction we're seeing right now. But what's going on here with VCs and fintech?
So in 2021, actually 21% of all VC dollars were invested in fintech. So global funding reached a record of $621 billion. The fintech portion of that was $131 billion. So when you look at, so that's 21%. And that's across almost 5,000 deals. And that compares to $49 billion, just over like 3,000 deals in 2020. So if you look at the pace of capital compared to the number of deals, it's just larger rounds on average. But I think just the fact that VCs are putting so much money into fintech, when you saw what was happening in 2020, obviously so much went to digital banking. Everything went to, we're no longer going into branches. All of that happened because of the pandemic. Right. Now people are relying so much on fintech, and so much more was invested into that space. So now I think just looking at trends for 2022, we're probably going to see a lot more of fintech investments.
As a percentage or a dollar, a whole dollar amount?
I would probably say both. I think we're going to see the same amount. I don't know if we're going to see a record year, but I think we're still going to see a lot of money invested into fintech. And I would say we're probably still going to see a big percentage. We're also seeing like a big percentage into like education tech, based on, reaction to the pandemic. But hopefully now we're in the endemic portion of this. But trends for 2022 that we're seeing, and what I'm seeing sort of already, but also in talking to some VCs, is like sort of the merging of fintech and the creator economy. All of these people figuring out ways to pay for creating their NFTs. I know you love to talk NFTs. But ways to manage payments, managing finances. And then we've got, this Great Resignation. So people have ways to manage their finances, their savings. Another trend we're seeing is like embedded finance. So companies that aren't actually financial services, but adding financial services into their offerings. B2B payments, I think, is another really big theme that we'll see. So we've seen like all of this digitization of consumer payments isn't happening on B2B side as much as it could, and it will. I mean, we see, companies like Paystand are doing that now, but there's not a whole lot of them out there that are doing it, and they're not, really doing it well. So I think we'll see a lot more of that. And then I think we're going to see a lot of like late stage funding into infrastructure, kind of building that roadmap horizontally. So since 2020, we saw like this huge jump on the roadmap, right? Like things that were supposed to happen gradually or down the road, it was like rush, get this done. It has to be done now because it had to be done now. Like these things had to happen in order for these companies to keep up, in order for things, even just to accept like the stimulus checks. These companies, these fintechs had to build things to accept these payments. And, so many things happened where it was just like this accelerated roadmap. So now it's sort of like horizontally building that infrastructure to fill in the places that were rushed. So I think we're going to see a lot of late stage funding in places where that infrastructure needs to just be kind of a little bit more robust. Another thing that I think we're going to see a lot of is funding in Latin America. This is already a theme that sort of had started to happen, and I think we're going to see more of. I think there's an advantage there because there are more unmet needs, more opportunities for startups. There's still about half of the population there that remains unbanked. So there's a big opportunity there. Like Nubank, which is a neobank in Brazil, in their IPO perspective, they highlighted that they remain significantly unpenetrated in respect to financial services compared to more developed economies. So those are kind of like the big trends, and I think it's not slowing down. And I think there's also, we're going to see like big banks investing in fintech to kind of keep up and remain relevant.
Wow. I can't help but to be thinking not necessarily about fintech, but what investments will look like in 2022. Feedback that I'm getting out of the SPAC arena, that's, I just view it as another way to go public. It's viewed as, less rigorous than a direct listing or a straight IPO. What I'm hearing out of there is nobody's interested in anything that's pre-revenue. And in fact, if you're not driving EBITDA, then you're out of it, and people aren't going to invest. So, anyways, just my 2 cents on that. And it's going to be interesting to see how that translates into fintech investments in the future. I agree with you that I think it's going to be bigger on a whole dollar and a percentage basis. If nothing else, there's a market to go after, right? It's not like you're necessarily creating a new market. You're taking money out of the hands of companies that have been in business for 100 years, which is a very different type of value proposition than, I guess, trying to convince people to do a self-driving car or something like that. So good discussion and analysis on this, but let's move to not buy now, pay later, but buy now, save later. Gosh, will you ask your industry to just stop it with the, do this now, get this later? It's so
get this later. It's
so
actually so. I think that's my typo there, but it's borrow now, save later.
Oh, okay.
But yeah, so this is really interesting. I like to kind of highlight things when they're a little different, and also when it creates a conversation. So there's this fintech called LendTable that has created a way for people to borrow money to contribute to their 401k plan so that their employer can match it. So roughly a quarter of Americans have zero retirement savings at all.
Yikes.
Yeah, it's scary. And even though they have 401k plans where they work, their cash flow is the problem, right? So even if it's offered to them, if they have to choose between, if somebody makes $40,000 a year and they have to choose between rent and groceries or contributing to their 401k, and they're young, they're in their 20s or something, they're not really thinking like, oh, I need to contribute to this because I have to think of what's happening when I'm 60. They're thinking, I need to pay my rent and I need to eat. So that's just missed out benefits, because if they have a matching program, they're not getting that money. So it's just money that's left on the table. So this company allows people to borrow money, have their employer match the contribution, and then when that vests and the money is put in the account, you then pay that back. So that's the borrow now, save later.
So the whole notion is stacking in a way that says, hey, if I can make 10% here, I'm paying you 3% here. Net, it's 7%. Oh, by the way, I'm also taking advantage of the corporate matching
Yep.
that goes along with there. By the way, that equation seems to work great in 2021. Look at it over the past month, and it doesn't work out very well, does it?
Yeah, so I think, it's interesting because obviously they have to make money somewhere, right? So what they're doing, they don't, but one thing is interesting, they don't do a credit check. They do match, or when it is matched, they take 20% of that match, and it's paid back at the end of the year. They also charge a $5 per month, like good standing fee, which is basically just an active bank account check to make sure that the account is active. So what's that, $60 a year? So I think it's a really interesting model. What I would caution on this is just paying it back. Like,
Yeah.
if you get yourself in a situation of now you have to take out an early withdrawal, so you're paying the 20%, then you've got the early withdrawal penalties on top of the fee. You really have to do the math to figure out if it's worth it. But even if you end up only, say you put in a $5,000 and then you have to pay the, let's say the payback plus the early withdrawal fee plus the taxes on that early withdrawal. If you still come out $1,500 ahead, you're still $1,500 ahead.
Yes. Yeah, and if they make it frictionless, meaning it's not hard, and I know just even personally, um, I don't do a lot of loans, but I've seen people who are low friction and are very digital, and there's other people that are paper, and they should have access to my information. I'm giving all my money to the people, even though they might charge a higher rate, that are frictionless. And I think the younger crowd, I'm not exactly a younger person anymore, but I think they've grown up with smartphones. They've grown up in the consumer economy as a service. Seems like they would jump all over this, and I just don't know if the savviness is there, right? Like, you're explaining this to me. I've been investing. You've been investing for 30 years. Have a house. Bought a lot of stuff. Sold a lot of stuff. I'm wondering how they get this message across. I mean, is this being promoted by the employer to get people to sign up for this?
So the way that they market it to consumers is that the employer doesn't even have to know about it. But I do think that this is a benefit to the employer as well, because as an employer, you can go to your employees and say, here's a way that we can help you to contribute to your 401k. And that's employee retention there, because like, one, we're going to match your 401k contribution, but two, if you can't afford to do it, we have a way to help you to do that. So I would think they should market it to corporations to help, and maybe
Yeah.
they are. I don't really know what their full marketing strategy is. I just came across them, and I think it's just an interesting concept. And it's really interesting to know that, I also think if they're drawing attention to the fact that people don't have savings, and that's something that they need to start paying attention to at a younger age, then that's a win too. So I think they also have on their roadmap things like stock plans, incentive plans, other things that can help the younger generation start to think about their future and their future wealth. So
Yeah, you had talked earlier in a previous episode about education for kids and
mhm.
about finances, and we seem to be a very financial illiterate society, which is kind of odd given that we have the best standard of living, or one of the best standards of living on the planet. So,
Yeah.
good stuff. So now it's time to check back into the hood. In fact, let's check under the hood and see how stuff is going. I mean, how's it going? I mean, you talk, and I'll put up the graphic here. It's kind of ugly, to be
It's kind
honest.
of like, I know I don't want to spend too much time on this, but I just feel like it's always just kind of a fun thing to just take a look and see what's happening with Robinhood because it's so entertaining. Yeah, so I mean, as you can see, they've taken a dive. So they had a net earnings loss of $1.32 billion. Right now, there's a big, there's a lot of talk around whether they're undervalued or whether they're an acquisition target, and whether they're potentially kind of on their way back up. They just launched their beta of their crypto wallet, which I think that's a huge advantage for them. They have 2 million people, or had, I guess, have still, because they're just in beta with a couple thousand people, but they have 2 million people on the wait list. Obviously, where that gives them a lot of, where that's a really good thing for them is that it gives people more control of their cryptocurrency. They had a lot of complaints about that, especially on social media, that people didn't have control of their own crypto on Robinhood, and their competitors like Coinbase already do. That a big portion of their revenue last year was from crypto trading, so that I think gives them some. That's on the plus side of, are they able to kind of rebound and come back up? There's some talk of some M&A activity, so they might be, I don't know, I think the analysts are looking at like a target of 50, but they're at 12.98 right now. That's rough. They were up at 80, and at their high. So it's
Is there any more discussion on the deal flow method, right? I mean, part of the free areas, they essentially sell the deal flow to the people that are upstream, downstream to them. So they
right.
can essentially do a better job at selling short,
Mm-hmm.
putting in options, right? If they know people are going to, buy a ton of it or sell a ton of it, they can make their trades. Isn't that their business model?
That is. And so far, SEC chairman has said it's questionable, but it hasn't been ruled as illegal, or they haven't had any sort of sanctions against it. So they're still able to do it. They also make a lot of money. I think we've discussed this previously, but they make a lot of their money on the crypto trading data as well. So, again, this crypto trading is a big moneymaker for them. So this crypto wallet could help them kind of rebound. But yeah, they've had a lot of problems, and I think that's probably a lot of where this is coming from, with the uncertainty of what could happen with some of this, with pay for order flow and some of these other things that they've had, kind of they've had some wrist slaps, but so far, and they've had some pretty hefty fines and things, but they always seem to bounce back from things. But I don't know, we'll see. There's been also talk about that, at this valuation they could be an acquisition target. They have a lot of customers, so there's value in that.
Right. Good stuff. Always a fun company to check in. And who doesn't enjoy a car crash, right? I mean,
It's so funny. I was just about to say that. It's like we have to check in because it's like you can't not look. It's sort of
yeah,
just
they make really interesting investments, car crashes, because sometimes you think it's going to it's going to wreck, and then it does these amazing things. I mean, gosh, I remember people looking at Amazon and saying, they're never making money, they're never going to do this,
right.
and once investors got hooked on the drug of growth, everything went from there. And every 10 years we have this kind of great reset in a few things, as we've discussed. I mean, E-Trade was the big crazy thing to actually make a trade 20 years ago without an advisor, right?
Yeah.
Without a stockbroker. It's like,
Yeah.
wait, you mean you're going to go in and make your own trades? Like, that was scandalous, right?
Mhm.
Because retail investors have no skills to do this. It has to be, but people loved it. I jumped on it. Heck, I remember
Yeah.
buying Cisco back in .com 1.0, and with the big run up, I mean, you could make money on anything. Does it sound
Yeah.
familiar? 2020 and 2021. I mean, if you couldn't make money in 20 and 21, I mean, you're never going to make money, right? When entire indices are going up. So I don't know. They have an interesting business model, which
Yeah.
is free services with, a way to monetize it, on the back end. It's interesting, and who knows? We'll have to see how this crypto wallet launch
Yeah.
goes.
And for some reason, there's just like a draw to them. I think that these, like JP Morgan Chase and others who have these sort of, self-directed investment apps, they just don't have kind of that coolness factor. So even though there's lots of competitors, there are others that are doing what they're doing. There's some really good ones I think I've mentioned before, like Betterment and Public, that are doing it really well. And don't have the volatility that Robinhood has, or the troubles that they have. But the big banks that are trying to compete just don't have like that kind of coolness factor that I think that they need to compete with them. So, but it is a train wreck.
Good stuff. Hey, let's go to my favorite part of your show, which is the acronym of the week. And this time it is a DAO. And by the way, the only reason I know what a DAO is I listened to a um, a podcast on them to figure out what the heck they were. But the floor is yours.
Well, yeah, this was by your request. A DAO, Decentralized Autonomous Organization. So basically, this is just an entity with no central leadership. Decisions are made from the bottom up. It's just governed
It
by.
sounds like a government. Sounds like a weird government type of organization. But are they buying stuff here?
They can buy stuff. Yeah, it's basically a community organized and governed by a specific set of rules, and it's enforced on a blockchain. And it can be any sort of organization. Some people will go so far as saying that it will replace like an LLC, but it could be a VC firm making decisions on investments. It could be a nonprofit making decisions on where to grant money. There's it's built on the blockchain. It's internet native, and everything is executed by smart contracts. So I think there's lots of pros and cons here. I think that, if you just look at a traditional business model, CEOs and heads of businesses exist for a reason, because they are experts and they are leaders. If everybody has an equal say in every decision, things can go wrong there, right? Like, you're the boss for a reason. You've been doing this for, how many years? If everybody has an equal say, things can get iffy. Although, if you look at it from like a VC standpoint, if you've got 8 partners and everybody has a say, you don't have one partner taking everybody's money, investing in something, knowing that if it goes wrong, he or she doesn't have to take full responsibility for it, because it, gets dispersed by the fund. So, it can be like something that brings a little bit more transparency, inclusiveness to a business, but it also can, be something that brings in a lot of opinions. And, like, what's the phrase of like, don't rule by committee? This is absolutely ruling by committee. So, and there's also some questions of legality and things like that. So,
Let me ask you this: there was a DAO that was going to buy a copy of the Declaration of Independence.
yep. Yeah, they raised something like $50 million and then didn't buy it.
They wound up losing, I think, by $1 to
Mm-hmm.
to an investor, and that is the extent of the experience of the DAO. It is a true experiment in democracy, though. If one vote counts, we're actually a republic, right? The United States, we're not actually a democracy. We're a republic because we have elected officials who represent us.
Right.
But I'm trying to think of, I mean, what is something that has truly been able to be managed through one person, one vote? I have no idea. But anyways, how does this relate to fintech, or does it? Is it not
It
related
does.
at all?
So the way that it's related to fintech is that it operates on the blockchain, and it's typically built on some sort of lays on top of some sort of currency or cryptocurrency. And that's actually kind of one of the cons to it, I would say, is that it sort of relies on this assumption of this growth of monetary growth to fuel itself. And it also makes the assumption that every person involved has some sort of financial literacy, because often you're making decisions based on this cryptocurrency or how to spend it or what, it's not always decisions about spending. There are, decisions made, based on, like, I don't know, there's some like proposals that are made to the group in a specific period, and then it's voted upon. But it is all blockchain based, and a lot of it is financial. That and most of it. So that's actually another thing that has the legality of it. The reason why that question has been raised is that usually these groups come together by each person owning whatever the token is. So it starts out with ownership of the token is how you get your voting rights, and that's how it's tracked on blockchain. So these tokens are sold. And the question of the legality is, are those tokens being sold as a security?
Wow. Yeah, I see some. I've seen some analysis talking about, hey, we could potentially use this to invest, to make VC investments, as opposed
Yes.
to being this massive VC. You get 1 million people with $5 each, and then you start to have some money. Okay, maybe 500. Okay, a piece, and then you can get the proverbial bite of the apple at the big deals, right? And I think that's fascinating, because I do think we need to make it easier for people with lower net worth to be able to get a bite at the apple here. And otherwise, it's going to be the same old story of the rich just keep getting richer. So I see a democratization of investment. By the way, sometimes democracies can be scary, meaning one person, one vote. It's like, no, you can be so far off,
Right.
and you don't have veto. You don't have
Yeah.
veto power, right? But anyways, fascinating stuff, Mel. I mean, let's talk about what's coming up. We are going long on this show. I'm rusty. I'll tell you that much. It's been, a month and a half since we did this, but can you tell us what's on your mind here for the future, or maybe some stuff we can talk about the next go round?
Yeah, I think one thing that I think is really worth taking a look at, and we'll talk about next time, is this whole concept of the Great Resignation. I think that it's really going to affect the fintech industry in lots of ways. When you look at the fintech tools that are needed to, help pay the gig economy, to help people save money, help people manage their finances, even all of automation that will be needed to fill these jobs that people have now decided they just don't want to do anymore. So I think that there's a lot of opportunity. There's going to be some really big winners. There's going to be some losers, and there's going to be a whole lot of opportunity there. And I think that's just a really fascinating thing that's going to be happening in the fintech and financial services world that we probably could do. Like, we probably don't need 4 or 5 topics next time. I think we can go like a whole podcast just on that. There's a lot of stuff happening.
All right. We have a question in from a person affiliated with the firm, Jacob Fryman. Could a DAO play a role in creating industry standards? Kind of like
I think that's a great
IEEE.
question. What was that?
I said, maybe not replacing the IEEE, but maybe
Oh,
serving
IEEE.
in a
Yeah.
that's my feedback, not the question from Jacob.
Okay. Yeah, I actually think that that would be a smart use of a DAO. I think that's a way that creating industry standards is where, bringing the transparency and inclusiveness to something where that works. Where I think maybe it's unnecessary is that for somebody to hold ownership in a token in order to create those standards. But to have those proposals be brought to a group and voted upon certainly makes sense. But to be included into that vote by ownership probably doesn't make a whole lot of sense.
Yeah, sorry to interrupt your train of thought, but my gosh, we get a live viewer question. I've got to put that in there. So, anything else on your mind that we should be looking at here? I know you hit a lot. You talked about the fintech for 2022. I know you've talked about automation as well.
I think that's it. I feel like
All
we have
right.
so much to catch up on.
That's a lot. It's a
Yeah.
lot. I know. Again, I'm a little rusty. You did great as usual, but hey, I really appreciate everybody tuning into the show. And if there's anything you'd like to hear in our next show, hit us up on Twitter. So I'm at Patrick Moorhead. Mel is at Melody
It's
Brew.
at Melody Brew. Mhm.
Okay, I see. I'm just so rusty. Jeez, this is terrible. But hey, hit that subscribe button if you like what you heard, and we will see you in 2 weeks. Thanks, and have a great weekend.